Good evening, everyone. Welcome to the investor presentation of Jet Holdings PLC, quarter two. From Jet Holdings, we have Elian Gunawardana, the founder and managing director, Rizna Dilshad, the finance director, and myself, Nishal, the CEO. You will have to excuse us if there's any technical difficulties because Elian and myself are taking this call from New Zealand. Uh, yeah, so we will proceed to the presentation. In Sri Lanka, Jet Wood Coatings, we have managed to increase our market share to 57.7%. Brilliant White, the decoratives, walls, White by Jet, and the newly launched Hydro Plus has a 5.9% market share. Brushes, we have increased slightly to 31.5%. And in Bangladesh, the overall market share is 27%. And in Maldives, the overall market share, predominantly for wood coatings, is at 40%. When you look at our financials, the local revenue has increased by 22%. The foreign operations has declined by 11%. But if you look, it's due to the conversion because if you look at Bangladesh, though the LKR revenue has declined in terms of Taka or the host country currency, we have increased it by 3%. The local revenue growth predominantly comes from wood coatings, the EV charger segment, and the retail projects. When it comes to the gross profit, we have increased by 4%, mainly due to the savings coming from the water-based binder. And the binder related savings has increased by 94 million compared to the first half of the previous year. When it comes to earnings before interest and tax for the second half, we have increased by 14%. Selling and distribution and administration expenditure has increased. The main reason for selling and distribution expenditure to increase is due to a higher advertising spending in the first half aimed at expanding market share in the local market. So compared to last year first half, we on a very conscious decision we spent more because we were pushing to increase the market share. This would ease down in the second half of the year because already we are reaping the benefits of the first half where we can see in the second quarter itself the market shares of the brushes as well as the wood coating had increased, and we are expecting the emulsion paint segment to increase in the second half. When it comes to administration expenditure, it has increased mainly due to the EV charger related overhead coming in and a one-off R&D cost for EV chargers. When you look at the other income, again, there is a significant increase that is mainly due to foreign commission that we received by selling the UV machine to Hatil, which is, I have mentioned this previously, that is a new line of business that we are doing as Jet, where we are selling state-of-the-art equipment, finishing equipment for the wood coating industry. Profit before tax has increased by 16%. There also the share of joint venture profit has gone down, and that is mainly is because we have incurred additional overheads in order to accelerate the operations. So when I come to the later slides, I will explain in the joint ventures because we are actually pushing for increased revenue in these joint ventures, and that's why the initial loss from these are coming in because we are accelerating from that. And then profit for the period has reduced by 22%, whereas profit before tax has increased by 16%, mainly because last year we had a deferred tax asset, which we do not have this year. So from a 408 million profit before tax, once we added the 104 million deferred tax, it came to 512 last year. This year we have done 474 before tax and a 76 million tax income, which has brought it to 398. The local sales growth of 22% is one of the very steady growth in the market, which shows that the construction sector is improving, and we have also obtained market share from the competitors. GP margin increase of 4% is an extremely strong sign. Even in the future, we hope to increase this further. And overall, the EV charger revenue contribution is 7%. When we look at the balance sheet, net asset value per share has increased compared to last year corresponding quarter. The earnings per share in the trailing 12 months have once again increased. Gearing has gone down compared to last quarter, which is again a very positive sign. The market cap has increased tremendously, and the return on capital employed has increased compared to last year. So net asset value per share is 21.3. Earnings per share is 3.27, gearing at 19.6, return on capital employed at 16.9, market cap as at September 30th was 23.89 billion, and the PER was at 14.1 times. If you take the sector-wise performance over the last 3 years, the corresponding half year, we have increased the wood coatings from 2.2 to 2.3 and now 2.6. And this is that significant push that we saw with the spend of advertising in the sales and distribution expenditure. If you look at the decorative segment, from 547, we have gone to 534 and increased it to 555. And we anticipate the next 6 months to really increase with the push that we have had in sales and distribution expenditure. Brushes, once again, from 145 to 181 million to 208 million. Furnishing from 71 to 193 to 216. Foreign markets is where we see the drop again due to the Bangladesh market. But if you take from the first 6 months in the financial year 25 to the next 6 months in financial year 26, though the rupee comes down, the rupee conversion comes down from a home currency basis, we have increased. And EV chargers from a mere 36 million, we have increased it to 378 million. If you take the wood coating sector, the market share, like I said, is 57.7. We experienced a year-on-year growth of 15% in revenue terms. The capacity utilization of the binder plant has increased to 80%. The net GP margin of the wood coating segment has increased 6% year-on-year. The loyalty base has increased by 9%, and the industrial sales has increased by 4%. So from a wood coating point of view, we have really increased in all the key performance indicators in this sector. When it comes to the decorative sector, it's a bit of a flat sector that you see a flat sort of thing in the 6 months, but a slight year-on-year decline of 1% was experienced, because when we earlier compared, we only compared the decoratives. Now it's decoratives and the other segments in the decorative market. So there was a 1% degrowth there, but the brilliant white segment has increased by 3% on a year-on-year. So on top of this, the Consumer Affairs Authority has intervened and stopped excessive discounts being offered from 1st August. So with this and with the advertising together, we are projecting the next 6 months to be extremely fruitful for the decorative segment, because there won't be any undercutting from certain MNCs in this playing field. The Hydro Plus waterproofing paint, the new brand added to our portfolio last year, is gradually gaining traction amongst the customers. And from our exclusive franchise outlets, we have a staggering 67% year-on-year increase. So this is strengthening the overall Jat brand in the industry. From when you take the brushes and rollers, we have a continuous improvement. So we have recorded a 15% year-on-year in revenue terms, and Harris and Brushmaster recorded a year-on-year revenue growth of 13% and 17% respectively. The GPs of both have also increased, and we continue to be the market leader in this segment. When it comes to furnishing, once again, a 12% increase in revenue in terms of in terms of projects. With the retail sector, because we have opened the lifestyle studio, there is a 19% growth from the furnishing retail sector, which is Herman Miller, Seaform, and Open. We have LKR 269 million worth of projects in the pipeline, and we have secured projects over 200 million from Maga Engineering in this one-to-one Private Limited, PH Resorts Private Limited, Anantara Tangol, and Signature Meridian Residencies. These are some of the key projects in this sector. When we look at the Bangladesh market, like I said, from 361, we have increased it to 373, which is a 3% increase. So in this, we have not accounted for the commission that we have received through the Bangladesh market by providing the UV lines for one of our main customers. So this is excluding that revenue. The quarter reflects a recovery phase as against the corresponding previous quarter. Revenue has grown by 4% in Q2, only in Q2, if you compare to the corresponding Q2 in the previous year. So this signals a growth in this market segment where we see the industry moving in the right direction. And on top of this, the four industrial customers, our top four industrial customers, have recorded a 15% increase in revenue. Again, good signs of a market recovery. The number of industrial customers, overall, we have managed to increase it by 6%. If you look at the foreign markets, we see a decline in the Maldives market. That is based on us taking a decision to change the distributor. And there is a timing difference due to changing of the distributor, that a certain revenue was not recognized, which was recognized about 100,000 USD was recognized in October. And we have switched the distributor to a much stronger, one of the top construction companies in Maldives now represent us. So we are quite confident that in the next 6 months, we would do a fair amount of turnover in Maldives. If you take the Kenyan market, there is a huge growth from 2024 financial year to 2025 and to 2026. So there is a steady growth in this market where we are actually capturing a lot of industrial customers, and that we see this as one of our strongest emerging markets. Seaform Perth, which is our kitchen and cabinetry business in Australia, we see a revenue of over 100 million in rupee terms in this 2 quarters, which is the start of a new business, because the business started, I think, coming from maybe the second half of last year. So that's why you see a revenue which you don't see in the corresponding first half of the year. When we take the EV chargers, we see a huge increase in the sales. So only in Q2 there was a sale of 192 million in Q1 and 186 million in Q2 of FY26. We have established the market leadership in terms of slow chargers. That is 7 kilowatt charger with 2000 plus chargers sold only for BYD. Gradually, we are pacing towards market leadership with regard to fast chargers, right? At the moment, we are only 20% lesser than the biggest competitor in terms of fast charging. And we have received another 40 numbers of confirmed orders for fast chargers to external parties, and another 30 chargers to John Keells. So with this, we would be claiming the number 1 spot in the fast charging as well. Some awards and recognitions we got. Harris was awarded the bronze at the Slim Digis 2.5 for the best use of digital in a marketing campaign. Saleact ranked among Sri Lanka's most valuable brands. It was recognized by Echelon and Brand Finance for its brand equity and market leadership in the coating sector. And for the first time, we were awarded a bronze award at the CNCI Achievers Award 2025 for industry excellence at national level, manufacturing sector for the extra large category. So expectations of Q2 is what we presented last time, and I will share you the outcome. So from this is what I shared in the previous investor presentation. From a Sri Lanka paint and decoratives point of view, we said that we would increase the market share in wood coatings with aggressive strategy and maintaining an increased GP. So our market share has increased to 57.7%, and our net GP has increased by 1%. Revival of emulsion paint market due to the consumer affairs intervention. So the brilliant white segment, the emulsion revenue rose by 19% compared to the corresponding quarter of the previous year. What I shared to you previously was the first half. From this quarter, if you compare quarter on quarter to the previous year's quarter, there's an increase of 19%. Then we said launch of paint accessories into the market. That is at a developing stage. We are looking at Q3, Q4 to launch this. Further increase of capacity utilization in the acrylic binder plant. We increased it from 70% to 80% in this quarter. In Bangladesh, growth compared to the previous year Q2, so a 3% growth was recorded. Increase in the number of customers is something that we said we would do. We increased the customer base by 6% and increase the retail presence in the market. We have increased by 7.35% compared to Q1. And we also stated that we would increase the gross the gross profit through R&D. So the GP margin increased by 1% year on year. In Maldives, increased sales compared with the corresponding Q2. So if you compare only Q2 without the full year, we see a staggering growth in Q2, right? Because we had a bit of a bad Q2 in the last year. From Kenya, we said increased sales in comparison with the corresponding Q2. Again, here we have done 22 million LKR compared to just 1 or 2 million LKR last year. Established the Jet brand in the industries. We are supplying at the moment to 30% of the leading industrial customers in Nairobi. Sorry, something that I missed to state in the start is if you have any questions, there is a Q&A section in this presentation. You all can post the questions in this, or you would after the presentation you could raise the hand and we would direct the questions. Sorry, I missed telling this in the start. Further expectation of Q2 again. Asia Pacific, we said in the wood coatings there would be a probable acquisition. So the Miratone brand and the company was acquired on 31st October 2025. We will be discussing some points in the future slides. Seaform Perth, completion of secured projects and establishing brand equity. We have a turnover of LKR 102 million, which was recorded for H1. And we have acquired a small local cabinetry manufacturer where through this we would have advantage because now we could do the German kitchens that we import, plus we have a local cabinetry shop. So this would give us an added advantage in the Australian market because there are some orders which take about 3 months to come from Germany, which we were losing. So in order to mitigate that, we have this new cabinetry shop, which we are confident that will help for us to increase our dominance in this area. In terms of EV chargers, establishing separate subsidiary, Volcharge in Sri Lanka. So the subsidiary is established and the share issue is in process. Further enhancing the position as the leader in EV charging in the country. I will discuss that in a separate slide. What to expect in H2 of financial year 2026. So that's the second half. From the wood coatings point of view, the next 6 months is to yield a higher sale than the previous year-on-year 6 months due to increased market share and expansion of the construction industry. So both of these together, we are confident that the next 6 months would yield a definite higher revenue than the previous year's 6 months. We are also doing a binder project, stage 2, where we are investing in some machinery that would be completed by January, and that would result in further backward vertical integration of certain products which we could not. And that would definitely increase our GP once again. And we are hoping to complete the R&D for our UV range by the end of this year. In terms of decoratives, increased market share due to the directive of the Consumer Affairs Authority, exclusive franchise outlet sales to further increase, and the Hydro Plus range to gain traction in the market. When it comes to brushes and rollers, increased sales year on year due to weakening competition. So for some reason, the brush segment, the competition has weakened, and we are capitalizing that by acquiring market share, and launch the paint accessories is something that we are looking forward to. In terms of projects, focus on increasing the sales through the Jet Lifestyle Studio. We are confident that the next 6 months would give us even more traction through this showroom, where we could increase our volumes there. And we are increasing the revenue through design outsourcing for kitchens and cabinets from overseas markets. So our design team is extremely strong, and we have done over about 2,000 to 3,000 kitchens in Sri Lanka. So we are utilizing that expertise to gain to do a certain outsourcing designing model, where we would get revenue by quoting for foreign companies. So this is an interesting project which we are doing, and we have already secured certain contracts on that. From a EV charger point of view, establishment of our own network of fast chargers around the country under the Volcharge, while we build a recurring revenue. So what we have seen is, with the EV market going up, we want to be in that recurring revenue space. So while we have about 50 chargers, we will have about 50 chargers in the next probably 2-3 months with John Keells, where we would get about a 12% revenue share after 24 months. We want to also be in this space, right, where we see that by installing a fast charger in the correct location, we could recover that investment in 1 year. So Jet is extremely positive on this move, and you would see a number of chargers under the Volcharge brand coming in strategic locations. So we are targeting about 50 to 100 chargers in the next 6 months, and this revenue would be maybe 85% would come to Jet. Further enhancement of the Volcharge application to, in the sense, the Volcharge app, we are leveraging it because we have about 8,000 customers now using this app, and we see the need of a universal app. For example, if someone goes to charge from the competitor's charger, he has to download a certain app. If you want to charge from ours, you download that app. Another one, another charger, another app. So what we are looking at is, as the leader in this fast charging segment, with the 50 chargers of John Keells and our chargers and certain other strategic locations coming in, we are developing an app that would talk to all the chargers, right? So this is something which we are quite enthusiastic about in this field, to play in this field. When it comes to Bangladesh, revenue from retail sector is expected to grow with the upcoming season. Increased focus on industrial sector, which is expected to grow despite the intensifying political unrest. So there would be, we are expecting an election in February, and with that, we are expecting a certain amount of political unrest in the maybe by about January, February, and thereafter a smooth run in Bangladesh. Retain the overall market share again despite possible upcoming elections in February. So our foundation is set so that we can capitalize when the market is proper in Bangladesh. In Maldives, we are very bullish about increasing in revenue through the market revival with stabilizing economy and the change of the distributor for Jet. In Kenya, penetrate further into the industrial market and convert leading industries, setting the foundation for exponential growth in the next 2 financial years. In Australia, from Seaform Perth, we are targeting approximately AUD 1 million revenue in the next 6 months and manufacturing of local kitchens in-house with the acquired cabinetry workshop to sort of bolster the revenue here. Yeah. So a quick 2 slides on the Miraton acquisition. So why Miraton? A 90-year-old brand originating from Australia with international market presence, top of the mind brand recall and high brand equity in Australia, the #1 wood coating manufacturer in New Zealand for industrial wood coatings, synergies that create economies of scale and expansion opportunities. So the value proposition is in any paint company in the world, right? The most valuable assets are R&D and the brand. So currently, we possess state-of-the-art R&D facilities and the resources for R&D. What we lacked was a legacy brand, right? So now with the Miraton acquisition, we have fulfilled this through this acquisition. Then Jet currently operates in emerging markets such as Bangladesh, Maldives, and Kenya. However, to penetrate to developed markets, a strong brand presence was essential, and that need was fulfilled by Miraton. Expanding into developed markets also helps us as a company to spread the risk of global economic volatility, as these economies are generally more stable and uh, less vulnerable to major downturns in global economic issues. So now JAT would be present in New Zealand and very soon in Australia, where it sort of balances between emerging markets and developed markets. Then Miraton brand gives ammunition in markets where JET is present but have not yet penetrated, such as India, right? Because it's a global 90-year-old brand and it would be easily penetrate, we could penetrate easily than going with a Sri Lankan brand or a Italian brand, which we are bringing in from Italy due to the cost factor. So the way forward for Miraton, short term, this is a less than 2 year, is capturing the synergies of the acquisition, product development and GP increase through R&D, expand to Australia. That would be in the next 3 to 6 months, we would be expanding to Australia. Then increase Miraton, New Zealand top and bottom line. One is through centralized sourcing for economies of scale and the reduction of cost of capital through reduced financial cost. If you take in the midterm, that is 2 to 3 years, we want to expand into the exterior architectural wood coating segment in in New Zealand. This is a market where Miraton is not present at the moment. So as you all know, all the residential houses are of wood in this market. So we are we have all the capabilities of a water-based exterior wood coating, which Miraton did not have. But with Miraton's brand equity, if we add this part of it to Miraton and launch this in the retail sector, we feel that that could give exponential growth to the New Zealand Miraton top line. Expand further into Australia, increasing the number of states present, because Miraton has been in all states of Australia. So when we initially launch, it will be maybe 2 to 3 states, and thereafter move forward to all the states. Utilize a Miraton centric strategy to enter India. This is something that we are very excited about, which we would plan in the next 2 to 3 years, and enter other Southeast Asian countries like Malaysia, Indonesia, and those countries where we can enter with Miraton, since Miraton has already have a presence in these countries. And in the long term, a 3+ year is to enter Europe and USA with the Miraton brand. So Miraton had exported to North America and to South America some time back. So we want to capitalize on those in the next, maybe the long term would be that. Yeah. So thank you very much. And we will take your question and answers. Yeah. The first question, when comparing commission per dealer, what is Jet Holding PLC's position relative to its competitors? So when we say commission to dealer, it is a discount structure that we offer, and sometimes there is a further discount that we offer on certain targets. There can be quarterly targets or yearly targets. So compared to the competition, I would say that we offer the least discount and on targets and on general sales because our brand is strong, right? Sayalak has a huge demand from the carpenters or the wood coating painters, and a huge brand equity than any other brand, like such as our main competitors, which I don't want to mention, but we have a much stronger brand presence there. So we don't need to offer the same. So we have offered somewhat of a lower commission structure or a discount structure, as you say.
We can, Nishal, if I can add to that,
Sure.
with the consumer affairs coming into play, the difference, of course, has dropped a bit, because what we're trying to do is to have a fair playing field in the paint industry, and the consumer affairs has managed to intervene and get that under control, so that the consumer finally has a better price, but the dealer doesn't necessarily make too much of a margin. Thank you.
Yes. Then the next one is how much, sorry, yeah. Could you explain how much cost is saved per liter by in-house manufacturing of binder? So we save about 20% on the existing cost per liter by the manufacturing of binder in-house. There is another, yeah. Last year, Jet mentioned a plan to offer color decorative paints through franchise outlets using a machine called the tinting machine. What happened to that strategy? So we have launched that strategy, and Colors by Jet is available in all our franchise outlets with the tinting machines. Also, it is available in the Jet Tech Centers as well. So this is also one reason why the turnover you all have seen in the franchise outlets, it has increased by about 65%. One reason is that we offer the full range of colors through these outlets. Risna, could you take this question? Why are some manufacturing plant depreciation expenses allocated under administrative expenses?
All depreciation under administration is not related to manufacturing. It is pertaining to buildings and equipment. All plant-related depreciations are recorded under cost of sales.
Yeah. That is all the questions that I see. Is there anything else that is being asked? I'm not sure whether I'm seeing all of the questions here.
Roni,
Nishal,
do
I
you
think
see any
someone
questions?
has put their messages under the chat. If you can
Okay.
enable the chat, there are, I think, 4 to 5 questions.
Okay. Now I see it. Yeah.
Starting from why someone manufacturing that question.
No, that I think we answered there.
Okay.
Does Jet Holdings PLC still buy alkyd resin and alkyd binder from outside parties? No. We are totally dependent on our plants. With the current market trends, what are the strategies in place for growth, and what numbers are we looking at the next 3 to 5 years? So that's an interesting question. When it comes to local, we see a huge boom in the construction sector, right? And that's one reason why we invested heavily in advertising and all to build brand equity. So we see that we would increase our market share further in the wood coating, but we would increase the place where we can grow is the decoratives. So we see that also growing with the brushes. Then in Bangladesh, already the market share is intact, but the market is a bit concise. So once the election is over, hopefully in February, we would see that market stabilizing. And then with the Miraton acquisition, New Zealand, Australia, and all of these markets, along with certain Southeast Asian markets where we can penetrate, and the EV charging business separately, where we see another exponential growth in this sector. So in the next 3 years, we are looking at probably increasing our turnover by almost 80 to 100%, right? This is something that we are very optimistic on, with all these strategies of acquisition, and where I showed that the synergies can come in together, and Jet is moving to being in. I said this in the Miraton presentation that I did previously, from 8 countries to 20 countries, right? So with all of that, I think we are confident that we could increase our turnover by 100% or even more, right? So we are looking at about something like 23 billion to 30 billion in the next 2 to 3 years. Yeah, and yeah, so that is the numbers that we're looking at, and from a profitability point of view, is also almost increasing it by 80% to 90%, the profitability, or rather the bottom line. Okay, please mention the wood coating sales volumes for Bangladesh and Sri Lanka during the quarter. So we have not had a price increase, right? So the value that you compare from the quarter to the previous quarter is also depicting the increase in volumes. So we have increased by 3% from the previous year to this year in Bangladesh, and in wood coatings, also that same figure that I said, in terms of the value, that's the same percentage that we have increased in terms of a volume. So you have asked, was there any price increase for any product lines? No. Okay. How many EV chargers were installed during this quarter, and how many more are to be installed in the next few quarters? Okay. Offhand, what I remember is, from a 7 kilowatt charger point of view, I think we installed about 1,000 chargers, right? And from a fast charger point of view, I think we installed in this quarter only maybe about 10 to 12 chargers we have. So we have confirmed orders of 30 fast chargers for John Keells, which will be installed in the next quarter. And we have another maybe 20 to 30 fast chargers, right, that we have from other clients. And we are in strategic discussions with certain organizations to install at least another 50 to 100 chargers, which might be invested by us or jointly. And there are people who want to buy outright the chargers, and maybe another 20. So from a fast charger point of view, the next 6 months would give us the highest number of fast chargers that we have installed, which I would say would hit about 100. So one fast charger is at about 3.6 million, is the 30, or now we have rebranded as a 40 kilowatt charger. So from that, I think minimum would be about 100 chargers. What is the revenue split between Keel Supermarkets and Jet for EV chargers? So the Keel Supermarkets have bought the chargers outright, and we get a maintenance fee, I think of around 10%, if I'm right, for these chargers. But the revenue share kicks in 24 months from the installation date, where we would get 12% of the revenue in the Keel's chargers. Yeah. How does Jet wood coating stay competitive as aluminium and other non-wood material gain market share especially in furniture, doors, and windows. Ilian, would you take that question, please?
Yeah, so these all, in the industry through the last 30 years of us being in the industry, you would see occasionally, aluminum coming in place, sometimes MDF and artificial timbers come into place, and different substrates. It could be laminates coming into play, but invariably, those sort of die down, and the natural timbers and the veneers, natural veneers, come back into the market. So we feel that going by our market studies, that the requirement for wood coatings is now coming back and is on the increase, and not on the downward trend. And we see that not only in Sri Lanka, but even in places like New Zealand. For those who were not there at the beginning of the call, why Nishal and I are in a hotel room is we are both in New Zealand at the moment. And yesterday we met some customers in New Zealand. One of the biggest customers here they make coffins, and all these coffins are timber with veneer on it, and a huge customer of Miraton. So they're just moving back in from regular products. They're moving into timber again and veneer, and a lot of use of wood coatings in that industry. Even the products where there are some of the coffins were actually made with MDF with a paper laminate, but the paper laminate has to also be coated. So that's where we have some coatings for the paper laminate as well, and that's where we are very, very strong and very confident.
Right. Thanks, Ilian. Are there any changes happening in the working capital management? And a dot or another bullet point there, reasons for the increase in overdraft. Rizna, can you take that question, please?
Working capital parameters across the group remains the same for all companies. However, the increase in overdraft is due to our expansion plans where we have invested in terms of capital expenditure and stocks in foreign markets. So the investment in stocks are basically on the sales projections made at those locations.
Right. Thanks, Rizna. Ilian, for you, there's a question. Difference between alkyd resin and the alkyd binder.
Okay, so the
I think,
alkyd resin and the acrylic binder, I think
acrylic binder.
what we're talking about, acrylic binder or acrylic resin is a resin that is based on is a water-based resin and used for water-based coatings, whether it be water-based emulsions for interior and exterior walls, whether it's for water-based wood coatings for timber floors, for furniture, for interior furniture, for outdoor furniture. All those are done with acrylic binders, and we have three different kinds of binders that we make now. And like Nishal said in his presentation, we have the fourth binder as well being manufactured, and these are all cross-linking binders which are top class. Again, this is something that we keep harping on. Only 4 companies in the world make these binders, and Jet is one of them, which we are very, very proud about, and that helps our GPs naturally. The alkyd binders or the alkyd resins are a product that is used for solvent-based coating. So for nitrocellulose-based lacquers, for PU-based lacquers, and for enamels. So we have long oil alkyds and short oil alkyds. So what we make right now are the short oil alkyd resins. The short oil alkyd resins are used for our NC and our PU range of coatings. So it's for solvent base, we use the alkyd resin.
Yeah. So just a summary of that, our acrylic binder plant is in Sri Lanka because predominantly 80% of our wood coatings is water-based. So that's why that's in Sri Lanka. The alkyd resin plant is in Bangladesh because 99% is solvent-based. So that's why for these two markets to cater the backward vertical integration for these two markets, we have one in Bangladesh for the solvent and one in Sri Lanka for the water-based wood coatings. There is a question here. I'm not sure what exactly it means. Just I think you can elaborate on that. Can you explain about and contribution to revenue? So I'm not very clear on that question. If you can resend that, then I could answer that. Please mention the
or you can speak up.
yes. Either way, please mention the capacity utilization of each product segment, including brushes, from a factory point of view in Sri Lanka for wood coatings. I would say the capacity utilization is about 70 to 80% on a single shift, right? On a decorative also, I would say it's at about 60% again on a single shift. And brushes, we are at around 90% now, again on a single shift. So we can, by adding an extra shift, we can double this capacity. In Bangladesh, we are at around 65% capacity utilization, once again on a single shift. What is the estimated size of the industrial wood coating market of New Zealand? So I think it's around 20 million New Zealand dollars in the industry, and another 20 to 30 million New Zealand dollars in the exterior wood coating segment. Yeah. Is Jet undertaking any initiatives to expand its market share in India? So that, like I explained, would be a midterm plan where it would be revolving around the Miraton brand. So in India, we have certain connections with some of the major Indian paint companies. So we would look at probably a joint venture strategy or something like that, where we give the brand and the technical know-how. So that sort of strategy is something that we are looking at in India.
Yeah, the advantage there for those who ask the question is that even if we make the product here under Miraton, one is that they will be getting a 90-year-old heritage brand and an Australian brand, and then they have a lot more affinity to sort of buy the brand. Plus, if we make it in Sri Lanka, through SAFTA, we can get the products in there, tax-free and at very low freight rates to India as well, and to different parts of India. So we are very confident that now we can relaunch in India and make a big impression in the market. There are already, with some consultants also, we're setting up some meetings with potential partners that might be able to take our brand and make it a big success in India.
Right. Thanks, Gideon. Yes, I think you had elaborated on the question. Can you explain on segmental contribution to revenue? So basically, without geographies, if we take the wood coating segment, gives us around 80% of our revenue because Bangladesh is 100% wood coatings, and Maldives is 100% wood coating. So all our majority of our export markets are that, and then we have about 80% from wood coatings and about maybe about 10% to 12% on decoratives, and about 3 to 4% on brushes, and 2% on the project sector. Right, sorry, 75% of wood coatings, and brushes is about 3%, and EV charges now has about 6% of the revenue share on that. So that is the segment. But if you take from a geographical point of view, Bangladesh contributes about 25 to 28%. The other foreign markets contribute about another 3 to 5%, and Sri Lanka contributes the rest. So that is the segmental breakup of geography and from the verticals there. So that's it here.
But with Miraton, we hope to increase our foreign revenues by next year to at least 45 to 50% of total revenue.
Right. Sorry, just another question. Why has Jet not introduced decorative paints and brushes to Bangladesh and Maldives? So at the moment, we are concentrating on the wood coating segment because we feel that we have a competitive advantage, and our core competitiveness is in the wood coating sector. We have a brand We have the backward vertical integration and all of that. And in this market, especially in Bangladesh, the decorative is extremely competitive with Asian Paints, Berger, and all of that doing decoratives. So once we establish ourselves a little bit more in the retail segment, we are now pushing in Bangladesh to be more prominent in the retail segment of the wood coating sector, right? And the next step would be, once we are successful, the next step would be maybe to go into emulsions, right? In Maldives, we actually sell for projects, we sell emulsion. And now, this is something I did not say, but with the new partner, who is one of the biggest construction companies in Maldives, we are confident that we could sell more emulsion paint into Maldives, right? So this is something that, because for their own projects itself, they would be using our emulsion, and thereafter we can push it for some of the other resorts.
We can also add, Nishal, that even at yesterday's meeting in Auckland, that the sales team of Miraton wants to take on the jet water base, the jet emulsions, in addition to, of course, some jet water base branded under the joint brand of Miraton and Jet. But
Yes.
we made a conscious decision to first get into the exterior wood coating market, which is again another 20 million market, and then go into the emulsions maybe in a few more months.
Yes, correct. The next question is whether there are seasonal demands in for jet products. Yes, in Sri Lanka, from maybe mid-November to the first week of April is the heavy season with Christmas, the New Year from a calendar term, and the Sinhalese New Year coming in. So we do about 60 to 65% of our revenue, and maybe again 55 to 60 or even 70% of our profit comes in the second half of the year. In Bangladesh, there is not much of a season, but during the Ramazan and that part of it, sales dips a bit, and that is, I think, in March, somewhere around March next year. Okay, that's it from the chat. In the Q&A section, okay, there is some questions that have just come. I assume Miraton's numbers would be consolidated from third Q onwards. Yes, it would be consolidated because it's a 100% owned subsidiary of Jet. Do you expect any one-off restructuring or acquisition related cost in the upcoming quarter stemming from the acquisition? Yes, like uh, in any acquisition, there is a certain amount of cost, but here I think we have certain negotiated certain things and all of that. So from a finance cost point of view, there is not much of a hit there. The one-off cost also from due diligence and all of that is the only sort of cost that would come into it, but not a major hit there, right? But the more important thing is the first 2 quarters, that is this quarter and the next quarter, would be more of a consolidation of New Zealand, right? Understanding that market, understanding the cultures, understanding the synergies, and entering into that market, right? So I think the first half would be that. There would be a certain cost that we would incur when we enter the Australian market, and thereafter we expect exponential growth in these markets from the following year.
Nisha, maybe the team will be happy to hear that our first month of operations as a JV company now, November, has been a very, very good month for Miraton. So that's good news. And we hope that'll continue.
Yes. I think the final question that I have here is what would be the estimated revenue from the EV chargers in the next 1 year? It's a little bit difficult to predict, but from what it's happening, we feel that it can be some. Now at the moment we have done about how much is about 350 million?
350.
Yeah, so in the next, that is this first half. So the next half would also be something around maybe that, and the next year, that is I feel if things move in this way, we would hit about a 1 billion mark in the EV charger segment, but it's a bit uncertain with this, right? It can be more, it can be less. Then we would get a recurring revenue as well from that, and there can be a certain channel through the app which we can sort of get a different revenue model. So it's in a very interesting stage, but I can't commit as to, or I can't estimate exactly how much it would be. Right. That's all the questions I think we have. Have I missed anything, Ruwani or Shalinda? Have I missed any questions?
I think, Nishal, we have last two question at the Q&A.
Chat. Okay,
Sorry, chat.
okay.
Yes.
Chat, no?
Yeah.
Yeah. Will the overseas revenue 100% come into the books of JET in Sri Lanka? Yes, so it first comes into the DMCC revenue because the acquisition happened from our Dubai company, and that 100% comes into JET PLC. So JET Holdings PLC owns 100% of JET Exports DMCC, which owns 100% of Miraton, New Zealand. Can you elaborate reasons for the decline in EBIT margin year on year? The EBIT margin, has it declined, Rizna? I'm not very.
Are they referring to the percentage or the
Yeah,
value?
percentage. No, the value had increased for sure.
Percentage is almost the same.
Yeah, percentage is the same. So if there
Rowan,
is
you want to
anything.
go back to that slide? Can you go back or?
It's around 11.8 and 11.9 in both years. So averaging around 12% in.
That's the one, no?
Yeah, here 11. Yeah, earnings before interest and tax is almost the same there. Right. So, okay. I think the answer there is when your GP is higher, maybe what you are asking is how come that is almost stagnant is because, like I said, the first 6 months, we spent additional amounts in the sales and distribution expenditure, and we spent additional R&D, one-off payment for the volt charge operation, and additional expenditure for the overhead in volt charge. So that's why I think maybe that's the question you're asking. That's why it's stagnant at 11% from a margin perspective when your GP has increased by 35% and from 31 to 35%. There's another question. Please give some insights about cost of sales, composition, and raw material. So basically, the labor component is less than 10% in the entire paint manufacturing. Energy cost is less than about 3%, and the balance is on raw materials in terms of material in the composition of cost of sales. Shalinda, anything else, or are we done?
No, we are done, Nishal.
Right. Anyone of you want to ask any question verbally, please feel free to raise your hands and we can answer that as well. No. Okay. So then thank you very much. And thanks again for having faith in JET Holdings, and hopefully, not hopefully, the Miraton acquisition will definitely give a lot of purpose and vision to JET Holdings. So I think please keep an eye on us and what we are doing, because we are also quite excited in the journey that we have in the next 12 to 24 months. Thank you very much.
And the fact that today, Nishal, we are truly international coatings company. So that's something we are very proud of as a company, and I think as a country that we should be proud of as well. Thank you very much.
Thank you.
Thank you, Nishal. Thank you, Rizna. Bye then.